Good afternoon, everybody. Good afternoon. Welcome to our Paul's Monday Market Update 192 for Monday, the 4th of August, 2025. I hope you're all well. Hope you had a good weekend. Hope you're ready for the sort of kind of last few days of formal volatility movement in markets before we sort of go into our summer slumber. And on that note, this will be the last Monday Market Update of the summer. We'll be back at the start of September. Anyway, if you're just joining us for the first time, if you're listening to this, the Monday Market Update is just that. It is me flying through as much as I can squeeze in the next half an hour to try and help give you a little bit of insight into markets. We look at the strength and weakness within the FX and indices market. We'll take a look at some charts of interest and then a look at the live markets. It is not a signal service. There are no trade recommendations. Okay, it is basically giving you an idea of what I'm looking at, and hopefully that might be of some help and use to yourselves. As always, you're very welcome here. Just remember that you are always responsible for your own trading decisions. If you want a bit more help and support, a bit more education, the Active Trade Monday Market Matters webinar will be on at 2 o'clock this afternoon. We'll be focusing on should we trade pullbacks or breakouts for the main educational element. You can join it, register on their website, or use that QR code to help take you towards them. And I'll also be running the Admiral Markets Market Pulse weekly update. Okay, Wednesday evening, 7 o'clock London time, taking a look at global indices, global commodities, the US dollar, sterling, and UK stocks. And you can join us there either on that bit.ly link or on the QR code. Okay, all right, let's dig into the main thrust. Now, if you're new to trading or if you're new to joining us, these are just snippets from my own weekend model, the STAM, where I'm just looking to identify where's the strength, where's the weakness, and where's the momentum in FX indices and commodities markets. So what is this telling us? Well, it's telling us that we are into week 32 of the year, okay, for the 4th of August. As always, I'm looking at where's the strength and where is the weakness. Well, what we've had is Swiss franc, okay, has remained top of the pile as it has done for pretty much, it's been in there for, well, you can see there for the last 3 or 4 months, okay, ever since we basically started getting into those tariff shenanigans. Holding its place in second is the euro, okay. We shall see. Okay, we shall see whether there is any particular change on that. It's been a rather eventful few days, hasn't it? We had a bit of an eventful end to last week, okay, which we'll see in the markets at the moment. But there was an awful lot happened, but invariably, probably the kind of major elements that have kind of lingered and hung over a little bit is that there was the big miss on the NFP jobs number on Friday. If you looked into it deeper, what you can see is that basically not only were the numbers revised down for a couple of months, but also the vast majority of jobs are private sector jobs. Okay, a lot of the kind of those federal public sector jobs have been sort of washed out, so to speak. And then invariably, the Trump fired the head of the BLS, is it the Bureau of Labor Statistics, basically said those numbers were rigged, and there was also the step down of one of the members of the Fed board, etc. So it was an eventful Friday, and that had an impact on markets, which we will look at in a moment. But as what we see is Swiss franc still top of the pile, euro at the second. What we have seen is look how kiwi dollar, okay, from being third last week has kind of fallen to the bottom of the pile, along with Aussie as well. Okay, those condols have sort of slipped their way back down to the bottom. An element of that is, still some of the tariffs. I think kiwi. I think they're going from, is it 10% tariffs to 15% tariffs? There might be others involved. Okay, that's kind of lingering on, and of course, Aussie has its own issues to deal with. There's also the elements with regards to copper, and then the elements that are linked to basically what goes on really with the kind of the US and the Chinese. What we did see is, US dollar, which has been kind of in that bottom of the pile. We sort of said it, and we'll look at that in a moment. The dollar has worked its way up there, okay, up into a fourth position. Japanese yen, despite the kind of lack of lack of interest rate rise last week, okay, at the Bank of Japan meeting. Not that anyone was any really surprised by that per se, has nudged it way up. And that is probably more of an indication of the weakness we've seen, certainly in Kiwi dollar. Sterling's holding on to fifth place, all right, but it's holding on fifth place, but not due to any sort of kind of endeavours of its own, shall we say. Certainly, when I look at the trading environments for all of these sterling pairs, okay, from where we were a couple of months ago, where sterling was very strong and you could see it was all buying environments. Now look at that, all selling environments, okay, against sterling, okay, for their longer term swings. Now, admittedly, what we've had today is perhaps we've had a little bit of, there's maybe a little bit of risk on element since the market opened. Yen and Swiss franc are clearly to the bottom of the pile, and Aussie and sterling have moved up a bit, but I think that's more a kind of a little bit of a sort of a reaction to sort of Friday's price action, more so than any kind of real indication. This week there is a little bit of news coming out, but it's not a terribly heavy news. And basically, after this week, everybody pretty much loses interest unless there's some sort of geopolitical event that sort of comes out of the ether to ruin people's summer holidays. Generally, after this kind of first week of August, everybody loses interest. Hence why even myself, okay, we will putting these on hold for 3-4 weeks. But sterling, you can see that's sterling's weak, and I expect it to slide further. If we look at the kind of indices and commodities from last week, okay, we all hit those highs, all right? We were hitting new highs, and everything was stand one bravo, strategic buying. That changed really last week, okay? We can see, as we said, even though some of the earnings reports were okay, all right. Some of them were not as great as people had hoped, but they were. I wouldn't say anything was terrible. But it still had the effect of pushing things to new highs, but then invariably after the jobs numbers, after let's say the political shenanigans, it sort of rug pulled those indices, and we saw them, and you can see actually they've worked their way into selling environments now. Okay, certainly for Dow, the Russell, and also the DAX, and we'll look at those at the moment. The kind of interesting thing is, which we will look at, is also the kind of the price action on the weekly chart, how that kind of played out. That's the thing that I'm taking note of, and we'll look at that more in a few moments. Okay, so let's have a look at a few charts of interest. This is Amazon on the weekly chart. Okay, interested. They had their earnings reports last week. Okay, and you can see what we're interested in is how prices reacted to that. So you had the Amazon earnings reports, and then, as I said, all those shenanigans in markets, and we were back up here at these kind of highs towards 240. All right, we're working way up. But, what have we printed there? Okay, we have printed effectively that's a bearish engulfing candle, a bearish key reversal, because price pushed to a new high, but then closed beneath the low of the previous candle. It's also now that's forming a kind of a lower high. All right, so to me, seeing that, it would not surprise me if we continue to get some of that. Let's say some of the sort of like kind of negative bearish sentiment. For me, it would not surprise me if we sort of drifted our way in the direction of $200, that big round number. We can see 200 has acted as a kind of either the pivot, all right, okay, resistance and support, and it wouldn't, as I said, it wouldn't surprise me if we drifted our way down towards that. That's what my scenario would be for over the next month or so on Amazon, and you might say for quite a few of the stocks over the sort of summer malaise. Here's another one. Palantir, they've got their earnings this evening after the close. Okay, so Palantir, a technology company in particular, okay, very heavily involved in defense security. Okay, have got their feet right under the table there, and that has worked out well for them. When you consider, we were looking back in sort of 23, 24, you were trading here, okay, in that sort of range. Here we go. This is the weekly chart between about $10 and $20 there. I haven't drawn that super well, but you get the gist, don't you? Where you can see is that basically, as they have started to win more and more of those contracts, that has been quite some steep trend. Now, admittedly, not a massive shock, okay, to have had that kind of really very, very sort of violent pullback, you might say, but then pretty much, there's very few stocks that didn't have that, okay, as part of the Trump succession and then the Liberation Day. But, just to look at how quickly that has come back and how strong that has come back from those areas in March and April and where that has gone, that has flown its way up. And now, it's tickling, right? It's tickling 160, tickling $160. So from, 2 years or so ago being down at $10, $20 to 160, that's quite some move, isn't it? And quite some move. And really, if you look at this since, where's that? Okay, since the last year, it's only spent 1 week beneath the 20. Just look at that. Really, only spent 1 week beneath the 20. You've had 1 week where it's closed beneath the 20. Next week, back up above it. All right. The moving averages are all in alignment. They're all fanning out. That is just showing you, what a great move. And even when we printed this bearish key reversal, which, starts to get everyone a bit nervous, myself included, you can see that the next week's candle was not, there was no real kind of bearish follow through and then basically bullish, and you're just pushing through that. Okay. And so, as I said, I'll be interested to see what their earnings are like this evening. And we'll see whether that keeps it shoving it high. But that is, that's really been there. You might say that has been like one of the stocks of 2025 in terms of how it started the year and how it's continued to push higher. Another company who I've got their earnings, so Wednesday before the open, is Uber. Most of you all know who Uber are, okay, in terms of the, they call themselves a technology company, but, might be looking more at sort of, most people just still think of them as taxis, of a different variation of taxis. But for a long time, when last I looked at, we were kind of just talking about how it might be sort of said that you're just looking that you're kind of bouncing between $60 and $80. All right, this is, and you can see and some great swings going on there, some fabulous swings sort of happening and occurring. And then once we broke north of $80, okay, we've just pushed our way up higher. Now a little bit of an evening star formation there, okay, up at 96. But what we have seen is that that's just come off the last couple of weeks there. And as I said, they have got their earnings before the open on Wednesday. It's quite excuse me. I've got quite a bit going on. Wednesday, you've got Shopify, Disney, McDonald's, etc. So there's quite a flurry of them coming out before, but excuse me, is that what you can see is I wonder whether we're going to drift away if that kind of sentiment continues that we've seen from Friday. Drift back to 84, drift back to that 20. Okay, if the 20 holds, then we have to push to a new high. It's just a very scrappy sort of uptrend. If that 20 fails, well, then you're back to 80, aren't you? Can 80 act as can 80 flip from being resistance to support? So 84 to $80. This would be my scenario of where we work our way down towards. And then finally, another one, Pfizer. Okay, they are reporting before the open on Tuesday. I've put kind of a longer chart on here because of course it's been quite some story. So, if we look at here, okay, these highs, all right, okay, these were COVID and post-COVID highs up here, $62 there. That's where we were trading. Okay, when everybody loved Pfizer because of the COVID shots. Okay, but as the kind of as well, well, you can find your own narrative, can't you? But whether you want to think it as that just basically as people got fed up of it or saw through it, or some of the feedback or some of the data was a little bit dubious, shall we say. The kind of the shine came right off Pfizer, and we have just seen a kind of a steady drift lower there, haven't we? Just a steady drift lower, working our way down there from 60. Now, we were looking around about 26, 25, looking at it as support, then turning resistance. Now, if you look at that, we've got basically prices beneath the 20, it's beneath the 50, it's beneath the 200. For those of you who love value, all right, a very, very simple way to play is, if we are trading way beneath the 200 on the weekly chart, well, then you might say, well, I'm just going to buy it and use the 200 as fair value and hope that sometime in the next few years it returns to that. That is one way to operate. Okay, wouldn't be my preferred way of operating, but sometimes the simplest ways are the best. I would probably be looking at this as, we are here in this kind of, it's a bearish flag. This 26 level, okay, which has acted before. It's acted as resistance again here with the 50 period moving average. We've closed last week back beneath the 20. Those earnings are poor. I think we sort of drift our way back down to sort of 22 level again as well, kind of lowest weekly close. So, if those numbers are poor, I think we work our way down to there at least. Okay. So, it's a pretty sorry state of affairs, isn't it? All right, but a pretty sorry state of affairs there for Pfizer. I think someone was telling me that they wanted to be bailed out, and I don't think there would be any kind of enthusiasm for bailing out Pfizer after the amount of money they must have made during those COVID years, 5 years or so, 4 or 5 years ago. But as you can see, it's a bit of a sorry state there in the way that's going. All right, there you go. There's the charts of interest for this week. Why don't we switch across to the live markets now and see what's going on? So if you just bear with me for a moment, I'll switch across to the live charts and we'll take it from there. So just bear with me one moment, ladies and gentlemen. Okay, so I'm hoping that you can still hear me. I'm hoping that you can now see the platform. Okay, so this is it's one of my platforms that I use. Okay, I use a range of MT4, MT5, Trading View, Top Step, and Ninja Trader as well and stuff. So so a whole host of these boys going on. But this is one I have just set for indices, and it's a weekly chart on the major indices. So I've got the Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei, DAX on the weekly, and oil on the weekly. Oil for me, yeah, there it is. Okay, I'm not massively excited about that at this particular moment. What I'm more interested in here is, in particular, at last week's weekly candles. Okay, look at there. In particular, NASDAQ. There, that's a bearish key reversal. Price pushed to a new high, rolled over, closed beneath the low of the previous candle. Same with the S&P 500. Price pushed to a new high, rolled over, and closed beneath the candle. Now, one swallow doesn't make a summer, and neither does one candle in a strong trend mean it's over. But certainly, and even Russell printed a very bearish candle. I will sit up and take notice of that. Now, what we also have to take into consideration is, that is the last end of July into the start of August. Okay, so regardless of let's say some of the domestic, let's say some of the international geopolitical events going on, there is also the case that the big boys, they want to depart to Saint-Tropez on their yachts, etc. And so taking some profits so that they can, as I say, go away and lounge about on their yachts in the Mediterranean, is a sensible move for many people. So there will have been a lot of profit taking going on, so people can have a bit of undeterred summer. But there is also equally an element of that sentiment being changed. And if we let's have a look at one or two of them on the daily chart, S&P 500. All right, weekly chart, you can see that bang, push to new highs, big engulfing candle, key reversal candle. We go to the daily chart, you can see where we are. Okay, so I'd be looking at this here as bang. We have been breaking our kind of structure beneath the 20, which if you look at that, we've been beneath the 20 since April, really. Not really. We've come back and touched it, but that's it. That's the first real close for about 4 months before it. We're going into August. I wonder whether we get caught in basically a little bit of a kind of a volatility squeeze between the 50 and the 20. Do we just basically coil up here, as I say, as people just get a bit dull and a bit bored and they want to go on holiday, and then it decides what it wants to do when everybody comes back in September? That is one scenario. Okay, and I think we'll find the next day or two whether that's going to happen. If it quietens down over the next couple of days, and we've not really got massive data, but we do have for America, we do have the ISM services PMI tomorrow afternoon, unemployment claims on Thursday, and that's really about it in terms of the major US data that anyone will be interested in. If markets reaction to that's quite quiet, I think then it's more a case of everybody's just got bored and gone on holiday. But that's what we can see on the S&P 500. NASDAQ, NASDAQ has pretty much done the same. Printed a daily, all right, a daily key reversal. Price pushed to a new high, rolled over, fell away, closed beneath the low. Okay, got beneath the 20, which, as I said, hasn't really done it. Same, all right. And I wonder whether just watch these 20 and 50 and price. Does it just coil its way up in between it? That's what I'd be one of these looking things. So here you go. Oops. So okay, thanks for that. I appreciate that. Sorry. So what we're looking at here is thanks very much. The guys, hopefully you can see it all now. That is basically is the NASDAQ on the daily. We just basically sort of worked our way down. Excellent. Excellent. Okay, super. Thanks. Thank you for that. All right. So it's a case of as I was saying before, same about the SP 500. Whether we just see if whether we just coil up here. If we coil up in between those on the daily chart, then I think it's just volatility going to sleep for a few weeks. Okay. If there is massive styling moves this week, well then I would be keeping an eye on it. But I think and I hope that actually we're just going to quieten down now over the next couple over this week, and then go quiet for the rest of the month. And that's the kind of similar picture that we see. As I said, we see across them there. If we look a little bit close to home, and we've got DAX. Okay, DAX, that's it's not an engulfing candle because it didn't it hasn't engulfed the entire candle there. It's not a key reversal, but it certainly is a bearish. It was a bearish candle, a bearish close. We talked for a while about how the price action wasn't exactly proof of. Thank you. Appreciate that. Thanks very much. Appreciate that we had a bearish price, and we've said the price action here hasn't been the prettiest. All right. If we look at the daily, yeah, we were holding above the 50, weren't we? We were holding above the 50, but there was nothing there that I saw that gave me any kind of bullish momentum or interest. I was just looking at that, thinking, I thought we'd already gone into the summer malaise, but actually now we can see that we're closing beneath what had been the earlier yearly highs. We're closing beneath the 50, and now once again, my scenario I'll be looking at that as well. Do we pull back up into that 50 and 20? And then create a lower high with some rejection and move lower. That's one opportunity I could look at. Okay, that we could work upon. But as I said, this week is going to be an interesting week. Is there still volatility, or is everybody just taking profits and going away and stuff? So I wouldn't blame them if they wanted to. And then close to home in terms of the FTSE. So FTSE continues, all right. It's holding above 9,000. It's holding above its recent highs. If we look at that, where's the others? We saw those American indexes there, beneath the 20. FTSE hasn't fallen away as strongly as the others. Now, is that because we've also had sterling weakness as well, which has an impact, or is it a case of just basically all the momentum and energy has gone into sort of the DAX and the American indexes? Possibly, but I don't. I don't see anything terribly exciting there, but equally, even though there's been an engulfing candle and a kind of rejection candle, it's a bit too early to say. Now, what I think might be interesting, of course, is Thursday. We've got Bank of England, MPC. People are sort of kind of talking about there might be an interest rate cut there, okay, from 4.25 to 4. I think people will be more interested in what Mr. Bailey's got to say, all right? They're in a bit of a difficult problem, as in everybody can tell the economy and the jobs numbers aren't great, but equally everybody can tell inflation isn't under control. So trying to cut interest rates to help the economy and help jobs, but whilst you've still got basically higher than required interest, is normally just a bit of it's normally a bit of a recipe for disaster. But maybe that's just me being overly cynical. We shall wait and see. We'll wait and see, ladies and gentlemen. All right, it'll make for an interesting time. All right, let's have a quick look at gold. Gold in the weekly chart. I see that really is going sideways and pivoting around that kind of between 3,300 and 3,400. Last week we had a bearish pin bar. This week we've had a bullish pin bar that's bounced off the 20 once again. Look at that 20 period moving average on the weekly chart. It's nearly, what's that, 18 months, 2 years since we were really closing beneath it. It's been way above it, and here we came down to, we bounced off it there. So if we go down to the daily chart, if I look at that for the last 2 months, I wouldn't exactly be. In fact, you might even say for the last 3 months, since we bounced off the daily 50 here. I just look at us, as I said, we're just pivoting, maybe between about 3,400, 3,200, all right, but 3,250, you might say that's just, we're in that range, a bit of a summer range there, maybe, okay. My view would be, if the volatility dies, so does gold. If there is still volatility and there is nervousness and bearish sentiment, gold will nudge its way back up to 3,400. That's what I'd be looking at. But if we look at silver, 2 weeks ago on the weekly chart, we rejection candle, pin bar, hammer, shooting star, however you wish to label it, and then we followed through last week. Okay, we followed through and go down to the daily. I'm interested because here, see how the 50 is acting as support? You've got kind of double trouble there, a couple of double pin bars there. My view on this would be, I'll be looking to see, can it go up to the 20, and then what does it do with the 20? See here, the 20 was lovely support. PO20 pushing its way up. If it comes up there and then basically that acts as resistance, well then back to the 50, and then does that 50 hold? Okay, so I think this week, as I've said a few times, I think this week will be key. If we push up beyond the 20, that's of interest to me. If we basically can't get above the 20 and we start to roll over again, well, then I wonder whether we just get a little bit of a sort of a kind of bit like gold, we're sort of going to drift a little bit lower. So, watch price action between the 20 and 50 this week on silver. Bitcoin in the weekly chart, we at 120, okay, we put in a bit of a rejection candle. Last week we drifted our way through it. Here we go. Once again, a bit like silver, this, isn't it? It is, it's been to its highs, it's held on, and then it's fallen away. But hey, that is a bullish key reversal off the 50 period moving average, isn't it? That's, bullish key reversal. Sort of short-term swing traders might be saying, well, do you know what, Paul, I'll trade that back up to about 117, back into the 20 period moving average. You can see the 20 is sloping down, the 50 sloping up. Once again, it's like a coil. But is it a coil because there's something bad going to happen, or is it just a coil? Price just coil up because everybody's going on holiday. Okay, nobody's really that interested. So yeah, short term you might be, if you're a short term swing trader, you might be looking at that, pushing that up to 117 off that. But an element of that, an element of those, all those commodities, oil, gold, silver, Bitcoin, and some of the others, relative to basically what's been going on in the dollar. All right, so and that's what we're particularly looking for now. Taking a bit slower. I'm working from home rather than the office today and stuff, and it's always the way. It's a poor choice on my part, isn't it? Because all the kids are off holiday, so they're all at home bloody on Call of Duty, slowing all my internet up there. There you go, finally. All right, so here we go. My dollar, all right, dollar profile. So Aussie dollar, Euro dollar on the daily, pound dollar on the daily, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, and the dollar index on the monthly. All right, let's have a look at the dollar index, okay? Why have we got it on the monthly? Because despite all of the talk about the sort of the bearish trend we're in, which we were last month, last month on dollar, we printed a bullish key reversal. All right, we printed a bullish key reversal there. Price pushed to a new low, but rallied, reversed, and closed above the high of the previous candle. Okay, that's not insignificant when it's the dollar. Okay, when I go down to the weekly chart, I've said this over the last couple of weeks, is that I thought there was an inverse head and shoulders building, but it needed to get up above 100, all right, to really convince me that we were changing that. And you can't see it. Well, you can see we bounced off it there, but when we go down to the daily chart, all right, We talked about it, bang. As I said, inverse head and shoulders. We broke that. We couldn't get above the 50 there, and we came down off it. And then the 20, in the region of the 20, we pivoted. And then we had a couple of days of real dollar strength. And it amazed me that, here we close above the 50. Then we close above this VB, okay, which is the neckline. We close above it. Then we touch 100, tickle the soft underbelly of 100, and then of course we got Friday's data, and we dropped back down to this area. So July was one of the, even with the close, okay, even on Fridays, July was one of the strongest dollar months, okay, for a long time, and you can see there now. Of course, that those Friday numbers dropped there. And it's kind of a bit of put people in probably a little bit of confusion. All right, okay, are we bullish dollar? Are we bearish dollar? Is this an evening star? Scruffy one? Is this the end of it? If I'm honest, it's a bit too difficult to say. I think the kind of those Wednesday, Thursday, Friday price action has kind of probably messed a lot of people around. I still stick to my view. All right, it needs to stay above the daily 50 to be bullish, and really it needs to get above 100 and hold for me to be convinced that we're getting to see dollar strength now. Looking at what happened when we hit 100, all right, it really did just basically drop off it beautifully. It might take a while for it to get its way back up there through August, if it does. If it just basically just goes sideways into a coil there, okay, for the rest of the month, it could easily do that. But then once again, I think the 50 and the 20, it could come down and test there and then work its way up. Okay, that would be a scenario I wouldn't be shocked by. Okay, we'll see what the services PMI numbers give us to tomorrow. But if we look at the kind of other dollar pairs, it's a bit, as I said, it's a bit of a strange. We have had like Aussie dollar, we had Aussie weakness, okay, but then we've had a day or two of it kind of pushing out. We'd had kiwi weakness, but last day or so has kind of taken a breather. We had euro weakness, we had Canadian dollar weakness, all right, we had sterling weakness, we had yen weakness, we had Swiss franc weakness. And remember, Swiss franc, okay, and euro are first and second in the pile, and that is why we've seen dollar jump from like bottom of the pile up to fourth on the in the stand. And I said, I would just be watching this week. Is it going to be, is it going to be just a week of basically volatility drying up as everyone finishes off their positions before the summer break, or is there basically a kind of bearish volatility in the stalking the market that will keep the guys and girls at their desk for a little bit longer than they'd hoped to. So, I don't have a clear picture on the dollar based on Thursday, Friday's price action. I think we might need a day or two to just let that wash itself out before we get some clarity on the way it works and moves. Quickly, I know we're overrunning a little bit, but it's the last one before the break. Listen, Kiwi's fallen to the bottom of the pile. Okay, as we said, Kiwi dollar daily. Well, for the last 6-7 days, we had Kiwi that weakness. Kiwi yen, had been going sideways, and it's probably a reflection of some of the yen weakness and Kiwi weakness. But you can see Friday's basically is yen strength. Okay, that in itself giving you something. Then we basically had over the last couple of days, euro has strengthened against the Kiwi dollar. The interesting thing for me is that Aussie has been weak. All right, Aussie's been weak there, but it is drifting against Kiwi dollar. Aussie Kiwi is not something I trade a great deal. It's very rare for me to trade. It has to be absolutely beautiful. I use it more just as an indication of which one is the strongest, which one is the weakest. Pound against New Zealand dollars. Pound strengthened. Okay, Canadian dollar has strengthened against the New Zealand dollar. The kind of other interesting one is Kiwi against Swiss franc here. It was in a beautiful trend, basically just showing us Kiwi weakness, Swiss franc strength. But even though Kiwi's dropped, if you look at that over the last week or so, that's, to me, this is more like a basing here, especially when you've got that big bullish engulfing bullish key reversal. That kind of, what's that, 47.40? I'd be looking at that, okay? If that holds, it would not surprise me if we get an indication of, a little bit of a drift higher for Kiwi, or maybe that's just more a drift lower for Swiss franc, right? But I'm kind of curious that even though Kiwi has dropped, it hasn't been hammered by the Swiss franc, all right? It hasn't been hammered, which is the strongest in the pile. So you might want to just add that to your watch list to see how that particularly plays out on there. All right, let's finish with sterling for today and for this month. Right, so as we looked on the stamp, sterling is holding in like fifth out of eight, but pretty much all of the sterling pairs are in selling environments. Okay, and it's not a massive shock. All right, pound against dollar daily, boom, here we go. Even pound against Japanese yen, we're drifting, and then we've just considered them back beneath that daily 50. Once again, a bit like kiwi. This is pound against Swiss franc. A bit like kiwi against Swiss franc, pound against Swiss franc. I wonder what's going on. I wonder if there's an element of some Swiss bank manipulation. I wonder if there's just a case of Swiss bank, is kind of getting to its limits. Because if you look at that price action, even though sterling has been weakening, it's I'd say that's just the price actions going sideways there. Okay, you can see that certainly over the last month, pound has weakened against the Aussie. Pound had been weakening against Kiwi dollar until the last couple of days. Pound has been weakening against the Canadian dollar. Basically, you had euro strengthening against the sterling. Then we've had a little bit of a kind of a pullback, and it broke its structure, but it's pushed its way back up there. I'm kind of curious to see whether this forms basically a lower high, and whether we sort of just drift into the dullness of August. Okay, over the next day or two. So I'm watching that. As I said, there's no real major euro data this week. It'll be more about what, if anything, Bailey has to say for himself on Thursday. All right. If he does something mad like goes for 0.5% interest rate cut because the numbers for the economy are starting to squeal, well, that in itself will put the cat amongst the pigeons, all right, and then we'll have to see what plays off there. But I don't think anybody's expecting him to do that. He's not. Yeah, he's not that kind of guy. All right, ladies and gentlemen, let's draw it to a close there. So apologies, we ran over a little bit, but I wanted to share a fair bit with you because, as I said, this will be the last one for August. We'll be back at the start of September. Apologies, I had a little bit of a tech issue there, but hopefully you got enough out of it to give you the gist of what we're looking at. As always, okay, I wish you the best of success in your own trading endeavors this week. Have yourself a fabulous week and month. Okay, if you are trading, have a great month. If you're taking the month off, I hope you get some rest and recuperation and come back in a good place for what will undoubtedly be a rather eventful final few months of 2025. Fabulous. All right, take care, everybody. We'll speak soon, and trade well. Cheers.